Well, boys, girls, the Bond King, Stephan van der Metre, now, fridge, yes, has gone ahead and done it again. This man that you're looking at is a disgusting, penny stock pumping, sickening clown, loser, and degenerate. Welcome back to Strongman Personal Finance. If somebody offered you $20,000 or $25,000 or more to talk about a company that you knew was probably garbage, that you knew was massively unprofitable, that you knew was highly speculative, would you take that money? Would you tell your fans that they should consider this stock and get paid for it? And if they get harmed, if your fans get harmed, hey, that's their decision, right? Well, if you have a little bit of, a little bit of care for your fans, a little bit of love, a little bit of emotional attachment, you don't want to screw your fans over, no, you wouldn't do this. You wouldn't get paid anything to pump a disgusting, unprofitable, share-diluting trash penny stock on your fans. But if you're a money-grubbing, disgusting filth bag with pale, blotched skin, and you're the self-proclaimed Bond King, and you want some money, well, you would 100% do this. So, Stephan van der Metre, in this video, got paid $25,000 to talk about this company, Avalon Globocare Corporation. Let's hear a tad about what he has to say about it, and then let's go check out the company.
Banks say we're in great shape. Of course, we know that's not always going to be the case. And now I'd like to introduce to you our sponsor for today's show, which is Avalon Globocare. Now, they recently changed their ticker symbol. They are now trading under ALBT under the NASDAQ. They're a biotech company. And here's the 7 reasons that I'm going to be adding them to my portfolio tomorrow. And I'll put a link to this in the description below with their symbol and their corporate presentation book for you to do some more research.
Thank you, Stephan. I really appreciate you, giving the disclaimer that people should do their own research. Because I'm sure all your fans have the capacity to really understand the financials that they're looking at. Don't they, Stephan? Well, so what are Stephan's motivations for potentially buying this? Well, apparently it made a 97% move in November. So, yeah, the stock went up a lot in the past. And, I don't know why, but it did, so maybe you should consider buying the stock because it went up a lot. It could be an overlooked biotech stock. Now, here's the funniest thing that I saw on here. This is the big one that made me laugh, okay? Apparently, over the past 12 months, insiders at Avalon Globocare have bought more shares than they have sold. Now, think about this. You're an insider, right? You buy a bunch of... And I'm not saying they're doing this. I'm not directly accusing them. But imagine this, okay? You buy shares of your company, and then you pay a YouTuber like Stephan van der Pale Blotchface $25,000 to talk about your company. It drives interest to your stock, and then the stock price suddenly goes up pretty significantly after you bought shares. Now, you got to be careful because the smoking gun is, are these insiders selling the shares after the stock price goes up? I have no idea what they're up to. But I can tell you, when you do this, when you advertise your company on YouTube with Stephan van der Blotchface and, you drive interest to the stock, yeah, it's going to go up and you could potentially financially benefit. And if you look at the stock price on the pre-market, oh my God. So Stephan made this video. What time did he make this video? He made it on December 28th, 2022. And we can see on December 29th, 2022, the stock is up 16% in the pre-market. I wonder what did this. I wonder what drove all this interest in the stock. Who could possibly figure that out? Okay. Anyway, what is Avalon? It's a clinical-based leading cell tech biodeveloper dedicated to advancing and empowering, oh, here we go. This is the key word right here, innovative, transformative immune effector cell therapy. So it's another biotech. Okay, they got the management. I mean, it seems like a real company. I don't know. Let's go look at the 5-year chart, okay? I guess I don't have a chart because it's a new company. But here's the interesting thing. You can simply look at the financials and see that they've had like no revenue. Okay, they have $320,000 of revenue in the most recent quarter. And we go down to their profit margin, negative 1,705. Free cash flow margin, negative 751. Let's look at shares outstanding. Looks like shares are going up almost every single quarter at a significant clip. I wonder what that means. Maybe they're diluting like crazy. We go to the balance sheet. They have total current assets of 4.5, total current liabilities of 3. However, that doesn't account for their cash burn, which we'll see in a second. They have long-term assets of 8, mostly property, plant, and equipment, and long-term liabilities of 5. Okay, so nothing horrible there. But we can see how their equity has gone up. How has it gone up? It's gone through common stock. It's gone through issuing shares. It's gone through capital contributions. This company is not profiting. The only reason this company has any equity whatsoever is because of capital contributions. This company is losing money, and you know that because their retained earnings is getting more and more negative every single year. Now, or every single quarter. Let's go look at the cash burn. So this company looks like it's never had, at least in the last couple of quarters, has never had negative operating cash flow. So what happens is, you go back to the balance sheet, right? So, for example, in 3 months, they incinerated $2.39 million of cash from their operations. Okay, so you go back to the balance sheet and you say, okay, well, they have $4.45 million of current assets, and they're burning almost $2.5 million every 3 months. How long can this last before they have to issue more shares? I don't know, maybe less than 6 months? I wonder if they're potentially considering getting that stock price up as high as possible in the preparation of issuing shares. Do you see the freaking grift that's going on here? This company doesn't make money. It burns cash. It issues shares. And, of course, they have stock-based compensation. Of course. Stephan van der Metre gets paid. Stephan van der Blotchface gets paid. The company eventually gets paid because you're buying the shares that they will dilute. And you, the shareholder, gets screwed. Because every time the companies have a dilution event, the stock price freaking plummets. Every single time. So, while Stephan Metre, I guess he's covering his butt.
Oh, I got a one-time fee of $25,000 to pump this stock on my fans.
At the end of the day, it's still unethical. Even if it's legal, it's disgusting and unethical. And this guy's a disgusting clown, and I would not subscribe to him. Have a wonderful day.